Here's a kind of a step-by-step guide for you. Tax research is critical for professionals to ensure proper tax treatment and compliance. The tax code is complex, and different interpretations can lead to disagreements between the IRS and taxpayers. I'm going to walk you through the essential steps that we should take during tax research. First, you must understand the facts. The first step in tax research is understanding the facts. There are two types of facts. Open facts. These are facts related to a future or proposed transaction. These can be modified to create more favorable tax outcomes. Closed facts. Facts related to past transactions which cannot be changed. In these cases, tax professionals must determine the best treatment based on the existing scenario. To gather facts, professionals interview clients, review documents, and speak with third parties. It's important to ask the right questions to capture all necessary details and consider any non-tax factors, like a client's personal goals or values that may impact tax planning. Step 2, identify the tax issues. Once the facts are established, tax professionals identify the tax issues involved. Experts in a particular tax area can spot specific issues quickly, while beginners may start to ask general questions like, is the expense deductible? Is the income taxable? In what years should the income or expense be reported? For example, in the case of refinancing a home mortgage, a tax expert might instantly recognize potential issues with the deductibility of refinancing costs. Step 3, locate relevant tax authorities. Next, tax researchers need to find the relevant tax authorities that apply the issue. These authorities include the Internal Revenue Code, Internal Revenue Regulations, court cases, revenue rulings. Tax research tools are used to aid in this process, such as Annotated Tax Service. Organized by the IRC sections, they provide explanations and court case summaries. Topical tax services, organized by topics like income or deductions, offering explanations and citations of relevant law. Keyword searches help locate specific authorities, but it's an art of balancing between overly broad and too specific search items. Step 4, analyze the tax authorities. After locating relevant authorities, professionals carefully read and analyze them to understand how they apply to the taxpayer situation. Tax questions often involve questions of fact, depending on the specifics of the transaction. For example, determining whether a business expense is ordinary or necessary depends on the facts. Questions of law depend on the interpretation of tax rules. For example, the phrase "in connection with the purchase of a home" can be interpreted in various ways, influencing whether mortgage points are deductible. When authorities conflict, researchers evaluate the importance of the jurisdiction, the hierarchy of sources, and the age of the rulings to determine which should be followed. Step 5, document and communicate the results. Finally, the results of the research are documented in tax research memo, which typically includes the facts, summarize the relevant facts clearly and briefly. The issues clearly state the specific tax issues being researched. The authorities list relevant tax authorities such as IRC sections, cases, and rulings. Conclusions provide a direct answer to the issue. Analysis explain the application of the authorities to the taxpayer situation and how they lead to the conclusion. In addition to memos, client letters summarize findings and recommendations are often prepared to explain results in a client-friendly manner. One tip that can serve useful is the Internal Revenue Service also has a great number of guides. If you can just use one of their guides. One tip is to use IRS publications. These publications are easy to understand, and if they answer the question, they're a good source to provide a client with information about the subject. Okay, so here's a more practical look at a common place to look for tax law. So this is Cornell Law School. They have this at law.cornell.edu, US code, and it makes it super easy to search. So 26 US code, this is where all the IRS stuff is. 102, let's say we have a question, someone comes to you and they're like, I just inherited X from my grandma, she passed away. What is it taxable or not? So as we knew before, first we have to be very specific on what we're trying to understand. First, gifts and inheritance are not the same thing. A gift is when you relinquish your right to something that you currently possess and you give that right to somebody else. Inheritance is just who's taking your stuff when you die. You no longer can use it. You want to have access to it. You're dead. You're just trying to determine who gets your stuff. A gift, you're actually giving away stuff that is currently yours. You are no longer will benefit from this, and you're letting someone else. So you'll still be living, and you're letting the other person have the benefit of this item. That's a gift. The other is inheritance, and there's a difference. And just thinking about it, you can tell there's a difference between me giving someone a car while I'm alive, or just saying who's going to wind up with it when I can not utilize it because I died. So anyway, so we have code section 102, gifts and inheritance. We have to know what it is, because everything that is inherited or gifted doesn't have the same treatment. So for example, let's say grandma had a car, so I inherited the car after she died. So now I want to see. So we have a general rule. You can see how it's laid out. A, B, under B, 1, 2. You have employee gifts, which is important. So as you realize, the code section itself is pretty shallow as far as the amount of information you get from it. So you're almost always going to have to go to here. So we clicked over here. Now you'll notice, so these are the regulations, Electronic Code of Federal Regulations. So the IRS also issues these regs, and you'll notice the regs follow the same guidelines. So the reg is 1.102. This is the first reg, -1, gifts and inheritance. So as you'll see, they'll go in much more detail for you. And usually they're a little less vague. Then you can go to court cases and look at what's happening in court cases. But the gift and inheritance is pretty straightforward. I doubt we need to go to court cases. And then finally, as mentioned before, this is really great to communicate to people, because the IRS has staffs of attorneys that try to look through all the laws and try to make it so people can clearly understand it. So it's in, book or pamphlet format. So right at the front, it has a table of contents. You can kind of skim down here to see what you think. Some of this is obviously for survivors, executors, and administrators. So for our particular question, it has more information than we need. So let's go to income to include. We go to page 6. Here you can see, go through here, 3, 4, 5, 6. Income to include. So if someone just has a general information they want to know is taxable, you could easily come in here, highlight this area, copy and paste it, whatever, and then send it to someone and then see if they have additional questions. You can go through here. If it matches your specific question, are they asking about interest and dividends? Are they asking about partnership income, S Corp? So if you get we get down here, it'll give you more specifics on, your specific thing. And again, it's a PDF on a website. You can download it if you want. You can search it for the terms. I'm actually trying to get down to here is just to show you the end. So if you go to the end, get all the way to the end of this thing. They have examples. And then this is what we wanted to go to. They have an index. So you can go through this index and you can see, what do they have? Car? Well, probably not car, but you can probably go through here and find something that is dealing with what you're trying to find out. So anyways, this is a great source. Ultimately, a lot of times the easiest thing is to first go to the publication, get an understanding, and then maybe try to dive in deeper after that. All right, there you go.